Hello guys, my name is CryptoKib and today I want us to discuss trend lines and chart patterns. As you know from the market structure class that I said, when you come onto a chart or onto your trading platform and you want to take a trade, you want to first identify the structure which is in play on the high time frame before you take your directional bias. This will give you an insight into which side or which direction the market is following in order for you not to trade against the trend. Because when you take a trade against a trend, it is an easy key to losing. So you want to identify the structure. But if you do not want to go that route, you may want to use the trend line tool to identify which trend is in play at very time you are placing your trade. This is done in order not to place a trade against a trend. You can't come to the platform, open up your TradingView, and because you see a red candle, you decide to place a short trade. Or if you see a green candle, you decide to place a long trade without knowing which trend is prevalent. You might as well be placing your long at a resistance point or placing your short at a support level, which will end up being bad for your portfolio. That is why today I want us to talk about trend lines and possibly chart patterns. You'll be wondering, what is a trend line? A trend line is a very basic and very powerful tool used in technical analysis. It is very simple to use and it gives you a very good sense of direction in order to give you an edge with your directional bias. The trend line is a line which reveals what the current trend is, and it gives us an insight into early trend reversals. And as you know from the market structure tutorial, the trend is a series of higher highs and higher lows for an uptrend, and a series of lower lows and lower highs for a downtrend. So a trend line connects series of lower highs for a downtrend and series of higher lows for an uptrend. What this means is this: if you have a trend, like you have a low to an high, then to a lower low, to a lower high, then to a lower low. This will be an high and this will be a lower high. You want to connect this very point and this very point together. This will then be a trend line because it is telling us that the current market situation is to the downside. But you do not want to end there. You want to draw it further down into the future space. So whenever price returns to it, you want to find resistance at this point and then for it to continue lower. If you have a series of lower lows already, these are multiple lower lows, right? This is a lower low, this is a lower low, this is another lower low. While this is a lower highs, another lower high, another lower high here, and this is the original high. So seeing this structure, you can connect it either way, but what you need is a minimum of two highs, two lower highs, right? Which is this, or this and this, or this and this. And you want to connect the highs together. As you can see from this rough sketch, these two are perfectly connected, but these two didn't get there. So when things happen in this case, you want to connect from this other high to this high here and connect it downward. Sorry for that bad drawing. But there are also rules of lines that you have to watch out for when we discuss them while we are still in the lesson. What are the basic use of trend lines? Trend lines can help us in knowing direction of the current trend. It can also show us diagonal support and resistance. And with the use of trend lines, we can recognize chart patterns and channels that are currently forming. The use of trend lines is easy, like I showed you in this previous example. And to reveal a trend, we want to connect a minimum of two lower highs leading to a lower low for a downtrend, and a minimum of 2 points of higher lows leading to an higher high for an uptrend. What this means is this: we know a downtrend is a series of lower lows and lower highs. So we have a low like this, This is an high, this is a lower high. We have at 2 points, which is a minimum for us to draw the trend line. And this is a trend line too, so you want to select that. Start from this very high and make sure you connect it to this other high. But then you do not want to stop there. Like I said in the previous example, you want to extend it into the future like this. And so when price comes back into it, you want to see a resistance at this point for it to go back lower. But sometimes price may not come back into it. But let's leave that for now and just show you the example now to draw the trend line. So you want to connect the minimum of 2 points, either 1 2 or 1 2 or 1 2. Some do say a minimum of 3 points, which is 1 2 3, but it doesn't matter. But make sure it's not lower than 2 points for it to have a valid trend line. And for the uptrend, you know, an uptrend is a series of higher highs and higher lows. So as we have an high here. Now looking at this uptrend, you want to connect minimum of 2 points, right? So this is 1 2. Then you take your trend line 2, you place it at the first point, you connect the second point. But then you do not want to stop there, you want to draw it into the future. This is more of a rule-based way of using trend line though, but that doesn't matter. You can draw it as you see fit, especially when identifying chart patterns. And remember from the support and resistance tutorial that I said, the more touches a support or resistance has, the better chances of it holding in future. This also applies for trend line and diagonal support and resistance. As you can see on this, it is acting as a resistance level. Whereas it got resisted there, pushed lower, price came back for a retest and pushed lower, even lower than this low. Then it came back for another retest and pushed lower again. So when you have a 1 2 3 points of touches, what will you naturally expect? You expect that when price come back into it in the future, it is bound to push lower again. So you will be waiting to take your trade on the retest. Likewise, in an uptrend, when you have series of multiple touches, when price come back into it again in the future, you expect for it to resist it, right? And then push lower. But then I made a mistake here. I shouldn't have drawn this like this. I drew it in the resistance way, but I should have drawn it as a support. So it should have come from this very low to this other low. So it should have come like this. So this will be the support trend line in an uptrend, because in an uptrend we want to identify the support trend line. That is the major one we want to identify. While in a downtrend, we want to identify the resisting trend line. And once we have a break of this trend line, assuming we have price come back and then break it here, that is signaling an early reversal of this trend. Now the downtrend which is in place has finished, and then we are heading to an uptrend. So you expect price to come back and retest the trend and then go back higher. Likewise, in the uptrend, what you will expect is for the price, when price comes and break this support trend line like this, you want a retest of the support and then a further break down. That is how to draw the trend line. But then when you connect these 2 points, the upper point and the lower point, like I have mistakenly done here, I didn't get to the point of drawing it yet, but I did. So that becomes a pattern, or rather a channel. We have an upward channel here, price rising to the upside in a channel term. When we get there, I'll bring you more of that. I will say, do not try to force a trend line to fit. Simply follow the rules and draw what you see and not what you feel. This is what I mean by that. Assuming you are on a chart which prints a formation like this, and like I said you want to draw a downtrend line from minimum of 2 lower highs leading to a lower low, right? And now we have this point leading to a lower low, which is this, and we have this point leading to a lower low, which is this. We can also take this point leading to a lower low, because we do not know where price is where it came from. So at least we have 3 points here, which is 1, 2, 3. We have another point here, but has this point led to a lower low of this? No. So some people, they draw what they feel. They feel because the price is coming from here, they can draw the trend line like this, which can be wrong, because this now is, you are drawing what you feel but not what you see, and you are not following the rules. You can do that, it's up to you, but then when you follow the rules, you may want to draw from this point and connect this point, or from this point and connect through to this point. When you extend it into the future, not minding the current price action here, you'll get something like this. So what is this telling us? This is telling us that this downtrend coming from all the way from here to this point has broken at this point, and probably we are getting a retest here or here. So if you had drawn the trend line like this based on what you feel, you will believe we are still in a downtrend, whereas we may no longer be in a downtrend, but we are preparing for a launch to the upside. Are you getting it? This is why it is very important to connect the lines. And also, when you turn this into a channel, a descending channel, by connecting the lower bottoms of this, what you will see is a channel, descending channel, which means price is likely to break to the upside. And when it does, you expect it to continue the rally to the upside after the retest, which you might get here. But then, assuming when this price broke out, it came back into it and got retested, then made a lower low here. How would you have done that? For us to have a lower low, lower than this very low, as you can see, this seems more like a double bottom, right? But here we had a lower low. This can be two things, and you can do this in two ways. Now, remember from the support and resistance class, I said we probably have deviation at this top, or a fake out. People do call it fake out or deviation, where we have price break above the trend line only to return into it and find resistance at this point again, then come back to the descending support. So what this means is this trend line has been reclaimed. One. The second thing is you can choose now to draw from this higher point, your trend line, to this point like this, because this is the recent lower high to this that has led to all these lower lows. This means now we have a new downward trend. This may be a reclaimed trend, but you will also notice when price returns to it, it may break it and come back to this new downtrend, only to come back lower again. This just means the downtrend space has gotten a lot bigger. So this thing do happens, but you want to connect minimum of 2 points that leads to a lower low, right? This is the highest point leading to these very lows, while this is the highest point leading to this new low. So this become a 0.1 and this become a 0.2. And you can easily connect these 2 points correctly. There is no crime in that. In either an uptrend or a downtrend, where you draw the trend lines at both highs, like here, and then the lows, like here, it reveals what we call the chart patterns or a channel. Also, when you connect points that doesn't lead to a lower or a higher high, a point that doesn't lead to a, like this didn't lead to an higher high, right? But you can still choose to connect it, this point to this point, when you connect 2 pivot points together, like this point and this point. That is not a trend line, right, in this case, but then it can be a momentum line, which you are watching, that if this point gets broken, then it means we are going further down. So you can make it a pattern line, as some people will identify some pattern like this with this, or you can refer to it as a momentum line. So talking about chart patterns, what are chart patterns? Chart patterns are price formations which form within the context of the chart and have a predefined path in which price should move. This is also not an exact science and won't always work all the time due to different market conditions. You can form your own patterns from what you see on your charts, but there are a few patterns which are common and which are out there even on Google. Some patterns also do not require the use of trend lines at all, while some require the use of trend line. The ones that do not require the use of trend lines are like when we have the double top pattern or the M pattern, as some people do say, or when we have the head and shoulder pattern, and also the inverse head and shoulders. All these do not require the use of the trend line too. While we have some like the ascending wedge, the falling wedge, or the rising and the falling wedge, the bull and bear flags, pendants, ascending and descending channels, or triangles. All these require trend lines to use to identify them. So let's get a bit technical with this chart and see how we can draw some trend line with this. Drawing a trend line to the upside now, we have 2 points already. We have this low, which led to this side, and then we have this higher low. It is an higher low because it is higher than this low, leading to this higher high. So we have 2 points, right? Now let's connect these 2 points. This is a trend line too. You can use that, or like I said, you can use ray. Ray allows you to select 2 points, and then it will extend it itself into the future. So I will select these very lows, and then this second low. Now you can see we have our trend line, our uptrend line. Now if you look at this, we have drawn from here to here, and when price came into it, it broke down, right? But what happened when it came back to it for a retest? It made the retest with a resistance. This is a support trend line. This is a diagonal support trend line. Remember, we drew the horizontal support like this. We drew the horizontal support like this, from one point like that to this other point. But this is a diagonal one because it is slanting, and the trend line resistance will be slanting to the downside, which is a downtrend line. So when it came back to it, it found resistance. As you know, support broken turned to resistance. It is the same thing with trend lines, and then it got pushed further down. So that is one. Then if you connect the higher high to this other higher high, it will reveal what I said is the chart pattern. So we connect this to extend it into the future, and this we can see it looks more like an ascending wedge, even though it didn't make a third test here for it to break down, but it looks more like an ascending wedge. So when you see this kind of pattern, you are expecting price to break to the downside. In some cases, it will break with volume to the upside, fine. But in most cases, 80% of the time, it always breaks down, just like we had here. So now let's try and identify. We have gotten the first uptrend line. So let's try and identify the downtrend line again. We have a point here now. This is an high. We have this low from it. Then we have this lower high. Then we have this lower low, or maybe this lower low, right? But nonetheless, we are looking at the highs when talking about that trend line. So let's connect these 2 points. Take the point A and this second point. Now we have these 2 points, this leading to this and this leading to this, or this. But look, I've just connected these 2 points. Now what happened here? When price came into it here, what we can see is some resistance, right? We have resistance here. Price couldn't go above it. And then at the end, price broke up above the trend line with some decent volume. We don't have a retest of that yet, but that's okay. It can be expected sometimes. So now that we have both identified an uptrend line and a downtrend line, let's try and connect the 2 lows from this trend line to see what it was saying. So this is a low made, and this is the other low from this high. This is a low, right? So when we connect these two, what does it look like? It looks like it's tightening and tightening from these edges. So it looks like a falling wedge. And from this image I have shown you, what does a falling wedge do? A falling wedge always break up to the upside. Like I said, patterns are predetermined. They always do this. So people put all the patterns together in order to be a guide or cheat sheet for us traders. So when you see this type of formation forming on your chart, you are expecting the price to break up to the upside, right? Good. So let's see again if we can identify some more trend lines diagonal. Now looking at this chart again, what do we see? We see this point leading to this point, right? Making this low. Then from this low, it is an higher high to this, right? We have 2 points. That is this and this. Again, what happened here? If we are to connect the highs to, you do not necessarily have to do this. Also, it's looking like a rising wedge. And rising wedge, what do? They always break to the downside. Maybe if at times, most times, it will from here find support, go to this side, then from this break down. And in most cases, it won't wait. So you just have to find a way to deal with it and predetermine the movement. So when this trend line broke, what happened? It came to it here for a retest, found resistance, came back again, didn't quite touch it, but met resistance again. Now price is down. And now we are having this retest here again. The third retest of this, probably this trend line. And now price is moving to the downside. Now, this trend line has broken, right? We have a high. This high is higher than this last high, right? So what did I say you can do in this case? We have from this side, this low to this side, to this low, higher high. Now we have a low. Looking at it, this low seems to be higher than this low even. So what do you want to do in this case that you have an higher high to this? This trend line is broken naturally, right? You want to move it from this very low, from this second low, and move it to this low. That is a new trend path. It is no longer the old path of this low. Sorry, it is no longer the old path of this low to this low like this. But now it has taken a new path for an uptrend. So this part is the way we want to draw it now. So when we expect, what do we expect now? We expect price to come from this high as it is coming into this trend line and then proceed back up. As simple as that. But then if this trend line ends up breaking, you expect a retest of it and then proceed downward. At which point you will then draw a new downtrend line. It's as simple as that. But then when we connect these two highs, what do we see? It will reveal another chart patterns, right? So when we connect these sides like this, one thing I want to mention is you can use the body of these candles, as in the close, like from here, here, and this point, like this, to this. As it touches it, breaks up above, but close down below it. You can even draw it from this point, as it is the last time, to this point like this. But it doesn't matter. You can also use the highs, like I am doing. So you can draw it like this. You can also draw it like this. And what are we seeing? We are either seeing a rising channel or a rising wedge. And what does it tell us? That at the end of the day, it always breaks to the downside, right? But probably it won't break as it is coming down. It will probably come to this level, find a support to the upside, and probably come to break it, then retest and move to the downside. So there are scenarios, right? I'm trying to identify the scenarios which may play out. It does not necessarily mean it will, because the market condition when this price gets to this might be different. Bitcoin can make a very bad move and it will break further down, so anything can happen. So you want to pay attention to what is happening in the market before you take your trade. Trading can be very risky, so you also want to manage your risk, and it will be good for you to watch the risk management lesson also. So when we squeeze this chart, talking of this before then, we have this side to this low, right? I don't know if I have done this. Then we have this lower high to this lower low. What are we supposed to do? We have a mini trend line, right? We connect this size like this, and we can also connect the lows like this or like this. If it doesn't look good like this, like it's widening, it's correct, you can just shift it to the open or close here to make it more suitable to your eyes. But it's still the same thing, right? This is a bull flag or a descending channel, and descending channel always break to the upside. So what do we have? We have a break with volume to the upside here, and on this second candle here, you can see this wick down into the trend line, and then it formed support, went back up, then we saw this move to the upside, and now we are getting a down move. Hopefully this hold as support again. And when we look at this old chart, I told you from the last lesson, we can always zoom out to see what is going on. What do we see? We see a low here, we see a higher low to this low, right? We see this side, we also see this side. By assuming this side wasn't there before, we had this side. So what will you do when you see something like this? You take your trend line 2, you connect the lows, then you connect the highs. Assuming this wasn't there, you connect the highs like this. And what is this chart pattern? I had this chart pattern like 2 days ago or 3 days ago before this breakout. I couldn't take the trade anyways. So what is this pattern? This is a triangle, right? This looks like a symmetrical triangle. And when we have symmetrical triangle, they always break up to the upside. And how long are they supposed to go? From what I've learned, at times they might move the same amount of distance here. So we may have a really big move happening from this breakout here, right? I can see I've done it the same way like this, and it's still giving me the same triangle we have. So what will I expect is if price come from any low point, break up, I want it to correct back to it, and then take off. So this is still the same symmetrical triangle or pennant, a bigger one. So this will be my expectation. Or before this plays out, the expectation might be that price will find a way to this trend line, the support trend line, and then rally back up, maybe get a little of resistance, break up, come back for a retest and find support, and then rally off. These are the scenarios which may likely play out on this very chart. So that is the way we can use chart patterns and trend lines to identify direction. And what this is telling us is this chart is looking bullish according to this support trend line, and this is telling us that this is still looking bearish according to this resisting trend line. But the two combined together as a whole, it is telling us that this entire move is a bullish move. Actually, it can break to either side, being a triangle. But what I do use to analyze or to determine which side is more likely to break out to is I look at the preceding move, the first move, and now here we have from a low to a high, like this. So I take it that is going to break up. But if this move were not to be there, this move are to be subtracted, and we only have a move from the upside to the downside, then up like this, then I will expect it to come and break down like this. But because we have this first move as a bullish move, I expect an overall bullish reaction from this. Let me give you a quick example of some other patterns. So some other patterns we have is when we see price moving in a channeled move like this, and you connect your trend lines from the highs like this. Doesn't matter if it gets there, then you connect the lows like this. What is this formation telling us? This formation is showing us that there is possibility of an upside breakout for this. This is a bull flag. When you see a channel to the downside, a descending channel is called a bull flag. And what will you expect is for price to come back here. You expect price to move from the lowest point to another point, maybe find a bit of resistance and a bit of downside, break up, come back for the retest, and back to the upside. and continue the move up. Then when you have a channeled move to the upside like this is also a channeled move. You can connect these points together, the top as well. This is now a channeled move. So what do you expect of channeled move? You expect after some series of up and downs within the bottom trend line and the upper trend line, you expect price to break down after a while. So a channeled move to the upside or a bear flag is expected to break down, whereas a channeled move to the downside, a descending channel or a bull flag is expected to move to the upside. But then we have some really strong move, powerful moves like this, right? When it breaks out, you see some very powerful move like this that maybe you cannot connect a trend line with. That is a parabolic move, and that is no longer a channeled move. So like this now, you have only these 2 points. This point didn't touch, and if you want to connect these two, it's as crazy like this from this point to this point. You can no longer connect a perfect channel, so it's a parabolic move and you just follow the trend. In that case, you do not expect it to break down, even though it may break down for a correction, but then you just want to follow the trend and trade the trend. If after a long move to the upside, you have series like this, and then you start seeing formations like this. What does this mean? You take your trend line, you might draw from either highs like this, then you draw the bottom as well like this. What is this doing? This seems like a triangle in a falling way. This is a falling wedge. Falling wedge has the same probabilities as a descending channel, which is a bull flag. They all have the probability of breaking to the upside. So when you see a descending wedge like this or a falling wedge like this, you believe sooner or later price will break to the upside. So you may want to take that trade as well, or find a perfect place to take the trade. Not just see this pattern and take a long trade at any time, because sometimes they also break down. Only to form a deviation and then come back inside. Then after coming back inside, find a support, then break out finally. They do that as well a lot. So you want to find a perfect place to take the trade. And if you see the inverse of this in a rising way, so assuming you have a move to the upside like this, then you see something like this. You take your line too and you draw it like this. Then you draw the upper part as well. And what is this formation as well? It is closing at the edges, so it is a rising wedge. And when you see a rising wedge, they do break to the downside, right? So when you see patterns like this, they are predetermined patterns in which price moving. So you expect it to break to the downside. So that is it, guys. There are other patterns on goggles which you can take a look at and you get used to them. That is just the intro and basic lesson about trend lines and chart patterns. Do not forget to subscribe to this channel so we can always discuss more interesting topics like this in the future. Thank you, guys.